Good day, traders. Richard Jacobs here, and welcome to the Underdog Weekly Perspectives Report, where we do a reflection on some of the trading action of the past week and form some views and perspectives on what we think and where we think the market's going to be going over the coming days and potentially weeks. Let's start out with looking at our top 40 on the daily chart, which we have up on the screen here. And as you can see, it's been a fairly choppy week. Past 5 trading days, really. We had this bearish candle followed by a bullish candle, bearish candle, bullish candle, bit of an indecisive candle with a wick on it, and then a lower close on the Friday. Although these last 2 candles were fairly compressed in terms of daily range, and really, just the shape of the candlesticks, if we were to drill down to the intraday chart, we would actually see that this made for very choppy trading action. We had candles putting in bearish, printing. We had a bearish candlestick, for example, printing over here, no follow through. Then we had the market putting in this bullish movement. Then we had a bearish structure, no follow through. Makes it very difficult from a trend trading perspective, especially on some of the higher and in fact some of the intraday time frames as well. The end result of all of that trading action has really seen a sideways consolidation over the past week around about this 23.6 retracement level of this leg of the move here, as you can see. So very shallow, if you can call it, retracement playing out at the moment, and consolidation. But what it's allowed the market to do is to work off some of this oversold condition over here. So you can see the stochastic has actually rallied off this oversold level, crossed above its signal line to the upside, and it's pushing up fairly bullishly from a stochastic point of view, even though the market is pretty much moving sideways at the moment. So what does that effectively mean? Well, what do we see happening from here then? Well, one of the things we've been highlighting and flagging to our daily subscribers is really the fact that we could see this playing out as a really shallow retracement and the continuation move to the upside happening sooner rather than later. One of the things we speculated about is whether we would see a deeper retracement back down, for example, to this 38.2, which lined up with this previous price structure over here, or even deeper towards the 61.8. At the moment, that's not what's happening on the market. We had the start of the retracement, but we really needed this follow through. We needed a break below this candle, which printed on the 11th, Friday the 11th of August. So for the entire week, we pretty much operated above that low water mark over there. And as I said, the stochastic started to work off its oversold condition. Now, do we see this as a shallow retracement and the continuation move to the upside playing out? Potentially, but one of the things we also flagged was that these shallow retracements, if you're going to be trading off the daily charts, it's actually quite difficult to eke out or carve out a decent reward to risk on a potential trade. Reason being, you're going to have to put your stops in below the swing low over here. Let's get some lines in somewhere below the swing low over here. I mean, if you get an entry over here, from a trend continuation point of view, you're only looking to ride the market back up to these previous swings highs. Now, that doesn't give us a great reward to risk. Maybe, if you're lucky, you can carve out a 1-to-1 reward to risk on a trade like that. So shallow retracements don't really give us great reward to risk. They tend to have a higher win rate, let's put it that way, than waiting for some of these deeper retracements. But you tend to get, as I said, the reward to risk is not great, so it's not something on balance that we like to look at. If we were to try and get bullish again, we'd actually, potentially, you'd actually wait for a break of this 50,000 level again. In other words, you look for a breakout opportunity from here. You'd want the market to push all the way back up into this 50,000 level. It's about 1,000 points shy, 800 or 900 points shy at the moment. You'd wait for it to break out over there. Alternatively, we could see the deeper retracement start to playing out. At the moment, given what's happening from a pure structure point of view, either one of those possibilities could materialize, but we sort of in the ballpark of a bias towards this being a shallow retracement, just in terms of what's happening on the structural point of view and the fact that we haven't been able to take out these lows over here. Not to say we can't take out the lows and see the deeper retracement playing out, but that's currently what the market price structure is telling us. So again, it could be one of those weeks where we're just waiting and watching. We're waiting for either the deeper retracement to play out or the breakout move to the upside over here. So that's what we got an eye on as we go into the new week. We're coming to the end of August now, coming to the end of or the last couple of weeks of the Northern Hemisphere holiday season as well. So what's also nice to see is we have seen an uptick. It's been a choppy uptick, but it has been an uptick in terms of the normalized ATR, and you'll recall that's the kind of that's what we wanted to see going into the end of August, and as we go into we start converting into our warmer spring and summer months. We want to see that volatility really just push to the upside. We're coming from a very, very low base. If you do a comparative over here, just go back to last year. Notice how the market comes down all the way, the ATR comes down all the way into the end of August, beginning of September, and then it starts at rally to the upside. We should, over here in the year before, we were at pretty low levels, and when we saw the rally started actually in the middle of August as it pushed to the upside over there. So what we're waiting for is this move to continue to the upside. In absolute terms, these volatility levels are still very, very low. You can see they're not. Just zooming out completely over here. Apart from this low level marks hit in end of May, the levels at the moment are still lining up with these levels over here, going back all the way to 2015. So in absolute terms, still not looking great. We'd really want, it's unlikely at this stage that we're going to see all our trading systems coming online in this year, because we really want to see that market push much higher before those things play out and we start getting involved in major sizing in terms of trading systems. Remember, one of the filters we use is the 16 benchmark over here, and we're way off it. We're around about this 10.5, 11 mark at the moment. So, but it's still gratifying to see that we're starting to push to the upside over here. So that's what's happening from the price structure point of view. We look over to the international market, see there's some form of corroboration in terms of what we're seeing. Starting with gold, daily chart. So a higher high being put in over here, but it's still pretty range bound if you want to look at it. We haven't had a higher close outside of this level over here. We're still really chopping inside of these, more or less, roughly in terms of this broader range between the 1300 and call it the 1200 level even. So gold at the moment is in a definitely in a short-term bullish push at the moment, but we would really want to see that break and close above to confirm that it's going to continue, or the potential, the higher probability move is for continuation move to the upside over here. But certainly if with this short-term bullish trend in play at the moment, it does add to the case for the markets to start topping out from the equity markets to start topping out, bit of risk off playing out, that kind of thing. So that's what the gold market is telling us. If we go over to the US, look at the S&P. We had we had the continuation move to the upside over there. We had a retracement, the start of a continuation to move to the upside. Market didn't put in a higher high. Instead, it looks to be falling back down over here. Now, a couple of ways to view that is, if we see a move back down here, it could be a complex retracement inside of this last leg to the upside, because we haven't really violated these this low over here yet. But it is a fairly deep retracement as retracement goes at the moment. It's tapping around about that 78.6. And remember, one of the rules of thumb that we use when we analyze our price structure now, our retracement levels, is if we see closes inside of the 78.6, it increases the probabilities that we'll see a break to the downside as opposed to a continuation move to the upside. Doesn't happen all the time, but it's just a rule of thumb that we eyeball when we get into this deep retracement danger zone over here, that the market could just follow through to the downside. Now, if we do see that materializing, that would be quite bearish. In fact, I think I made the point a few weeks ago that that would be the first bearish break of structure we'd seen this year, or at least post the US elections. Everything else has been, we've put in higher highs, higher closes. We've had complex retracements, but for them, all the way, higher high, higher high, higher high, higher high, and higher lows. So we could have a complex retracement again here, but the important level to watch is around about that 2400 level. If that were to give away, we have a break and close below there, then certainly we'd expect further downside. At the moment, there looks to be some short-term consolidation playing out in the S&P. So again, that's the case for some downside in the system. If we look over at the FTSE, yeah, it looks like we're retesting this previous swing level over here. We had this impulse move to the upside, complex retracement back down into previous structure, continuation move to the upside. Market didn't put in a higher high, couldn't push above those levels. Now it's pulling back down again. So that's quite a messy trading action, but it did find support at that previous structure level over there. Continued to the upside, and now it looks like it's rolling back down again. So quite messy in terms of what's happening on the FTSE. And really, first levels to watch is if the market breaks these levels around about 7,300, and then this one over here around about just under 7,200. If we were to see those levels giving, then it would certainly add to the case for further downside, as it is short-term momentum is to the downside, which I think is similar on the DAX in the sense of downside. Cleaner structure, downside continuation moves, lower lows, lower highs being printed, retracement back up over here, and now it looks like we're starting to see that continuation move to the downside playing out as well. So again, DAX is trending to the downside. The Hang Seng, let's have a look at what's happening in Hong Kong. Trending to the upside, we made this point, putting in higher highs, higher closes. We saw the start, again, messy trading action. Start of the retracement, continuation move to the upside potentially, then it comes back down and now just chops to the sideways. But certainly if we see a break below this level, which lines up with that Friday the 11th of August low as well, then it would really confirm a downside retracement. This market is still very strong. Still very bullish. I wouldn't get too excited in terms of a break of structure comes in way back down here. So even if it does put in the lower low, it would simply be a retracement within an uptrend that we are looking at. Looking at the currency, the USD rand. Last week we've just, the market just failed to push up and put in a higher high over here. Instead, we saw the rand strengthening as it comes back down. So again, a bit messy. Trend remains to the upside. There's a weakening trend in play at the moment. But eyes will be on these levels back down here around about the 12, call it the 1280 level. Because if we were to see a break of the structure over here, it could add to the case for further strengthening on the rand. But the currency is one of those wild cards that has been pretty choppy, and I've made the point to our daily subscribers as well that you want to always be keeping an eye on what's happening on the rand, even on the shorter term time frames, before entering your trading positions. And finally, let's have a look at gold. Oh, sorry, we had a look at gold already. So we've pretty much made our way around the currency world over there. So here's what we're seeing. Just to summarize it all, we saw this shallow retracement playing out. Markets consolidating sideways at the moment. Could be the potential for the continuation move to the upside. Could be the potential for a deeper retracement. The international markets seem to be painting the case or making the case for a deeper retracement to be playing out. There are definitely signs of vulnerability, especially in the short term, in the form of retracements and even structure breaks and continuation moves to the downside playing out. Gold is pushing to the upside at the moment, which adds the case for potential risk off from an equity perspective. So that's adding to the case for this to play out in a deeper retracement. At the same time, you know, the market has been consolidating sideways. It hasn't really put in that deeper retracement yet from a structural point of view, and the trend is to the upside. So that adds the case for, you know, the market to move to the upside from here. So tricky, and that's why we're making the case of let's wait and see. Let's wait to see if the market pushes below this low from the 11th of August, or let's wait to see if the market pushes back up to and through this 50,000 level before we get too excited in terms of longer term or, you know, trading off some of these daily chart structures. Guys, that's pretty much it for the for our weekly perspectives report. All the best for the trading week ahead, and as I said, rather wait and see and respond to what the market's doing. Cheers.